Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from the city of brotherly love, Dimitri Parkamonic. How you doing, D?
Hey, Will, how are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen. While I'm doing that, if anyone's joining us for the first time, Will and I, we do this show to help answer questions you have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we do provide a link to Zoom, right, Will, on the YouTube chat box.
Yep.
And yeah, if you click on that, that will take you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. When we let you in, you'll be able to ask your question live and direct. If you prefer to type your question, you could do that on the live chat on YouTube. Will's watching it. He'll read them back to me. And while we're waiting for more people to join us and for people to put their questions in, we'll start out taking a look at the pre-market report, see what's trading in pre-market hours, if we could get some insights from that. If we don't have any questions, I'll navigate to maybe a different part of the website. Maybe we'll check out some earnings tools since we are in the midst of earnings season. See if we could use some of those tools to get some insights about what's going on.
It's funny. It's funny you say that, because Rob's had a question. Lots of earnings this week. I know a lot of the tech companies are coming up. Yep. UPS took a hit. Will, if Dimitri could take a company like UPS and simply go through how he would use its earnings report and build a trade idea, would be great. That was from Rob. Anyways.
Okay, but the UPS has already.
It says I haven't looked, but it says UPS took a hit, so I'm assuming they reported. But
all right, we'll navigate to it, see what's going on there.
Cool.
All right, so pre-market report. These are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Here I see 49 stocks made our percentage gainers list, 85 on the decliners. So from that perspective, it looks like we're setting up for bearish bias at the open. If you guys look closer at this list, you will see that a lot of these stocks are low cap stocks. There are the market caps in here. There could be ETFs in there, leverage products. It could be closed-end fund, a preferred stock. Pretty much anything that's listed on the major U.S. exchange, if it's trading in pre-market hours and meets our thresholds, it could make this list. And let's narrow down this list to a smaller group of stocks and see if we could get a better insight, on a basically some kind of grouping. And what we'll do is use these filters here up top. I'm going to use this one in ETF. Click on that. We have a drop down list when you click on it, and you'll see that there are a list of ETFs. Some of them are the broad-based ETFs up top. Some are the sector ETFs. When you click on one of them, the table below will get filtered by stocks that are holdings in that ETF. So let's go with SPY. Click on that, and you'll see that the table here below now got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see a bunch of stocks, 10 made our percentage gainers list, 12 in the decliners. So kind of equal, I would say neutral bias at the open, maybe slightly negative. But what these little E's are telling us are that these companies just reported earnings. They could have reported yesterday after the market closed. They could be reporting this morning. And since the stocks are trading in pre-market hours, so reacting to that news event. So a lot of big companies, General Motors, GE just reported, 3M, McDonald's up 1%. Here are the ones that are down. I think UPS, that's the one Rob was mentioning, down 5%. So they just reported this morning. I didn't read the news yet, but down 5%. So we could take a look at what's going on there. We'll start with that, the UPS. Actually, if you click on here, just so you guys know, if you do click on the UPS from here, we do get a report about some of the pre-market trading in UPS. Before I navigate away from it, let me show you this report. So the report, it starts out showing you what's going on in the pre-market hours. You have a VWAP table here below. So these here are minute by minute volume weighted average prices. These are the volumes for each minute. So you could see here, where it started to pick up around 13,000 over here. And this is how it's trading minute to minute. You could see the bid and offer, how wide it is, the stop. And these are the changes minute to minute. All right, so I'm not going to go into right now that VWAP table and other ways to analyze this data. I think I'm going to leave that maybe in the next week or two, because we are coming out with tools to help you with that. But the data is here for you guys to view. All right. And these are some of the stats of that table. So this is the total volume so far traded, the VWAP price in the pre-market. This is the standard deviation of the VWAP, the high and the low price. So it's a big range so far this morning. And some of this, was before the news came out as well. All right. This here is showing us the volume, where the volume was concentrated, around what prices. So these are like volume bars. This top one, that's showing us that the bulk of the volume, 80,000 shares, traded between 186.25, 187.16. So, in that whatever 90-cent range. And if we move over, this gives a breakdown of our estimated trader cohort. So based on this, we look at the size of the orders, and some of the orders we do consolidate based on how they come in and the time difference between each order. But here we see that the amount of the institutional, about 28,800. These would say more professionally sized trades, 29,000, and then we got the volumes added up for retail and very small retail. Right, so that's like a distribution of trader cohort. And then down here, we show the distribution of the volume between the dark pools and lit exchanges. And here it's shown that most of that volume is hitting that lit exchange, although we did get about 16,000 in the dark pool. All right. I'm going to come over here, since it's earnings. They just reported earnings. Let's see how UPS typically did around earnings. So we could see here that historically it was up more in the mornings. It got up more often than down. 64% of the time it was up, 36% down, for an average gain of 2.3%. Obviously today that was on the downside. The typical move on average up or down is 5.5%. So this move is not, outside its normal range, right? So 5.5% up or down, that's That's basically the average move up over the last 12 quarters, I believe, since 2020. The high move 11.2%, low move 1.3. So if we see here 11.2% move to the upside, you could see that its moves to the upside actually were much greater than the moves to the downside. So if you're playing this, the upside surprises seem to be much bigger than the downside. And this is the best move. Yep.
I missed a question earlier, but Michael was asking, at what point is the VWAP calculated from?
Yeah, let me come back here. So we calculate, so the VWAP, if he's saying on a day, okay, and this is a good question, actually. We calculate the VWAP based on trading sessions. So for the pre-market, we have its own VWAP. We don't average it out with the regular trading hours. So with the regular trading hours, we calculated, from the official opening price to the official closing price. In the regular trading hours, it's when it first opens, like at 4 a.m. I guess that's where it starts. And after the first trade, from there, that's when we calculate the VWAP price for the day. And each minute, right? Each minute has its own VWAP price. So, and that's just minute to minute, right? The beginning of each minute to the end of each minute. Right, but we do a couple things here about the VWAP price, because a lot of people do reference the VWAP price. So when we calculate the VWAP price, we don't include any kind of trades that were contingent trades. So if the trade was a special trade tied to a stock, tied to something else, or it was a special non-regular trade, we wouldn't include that in the VWAP price because there's something else going on there. It's not a straight purchase or sale of a stock. There's other things going on in there, so we exclude those from the volume weighted average price. We do include in there any odd lots as well, because all of a sudden the odd lots became actually, a big, piece of the volume in the overall trading. So even if it's only one share, it could be 2 shares, 3 shares, it could be 130 shares, those will all get included into that VWAP price. All right, so it's how you calculate the VWAP. Not everybody will do it the same. Some I've just seen any trade that goes by, they'll put it in the VWAP. But then what you will have is, trades that were, maybe, buy rights or taking off trades or whatever, contingent on some other things, that then they're going to fall into that as well. Average price trades, all kinds of stuff in there. But these would be more just the regular way trades, the VWAP of regular way trades and odd lots. If they're in a dark pool, if they trade in a dark pool, that will make it as well. So that does lit exchange or dark pool, it will make it into that VWAP price.
Excellent. Thanks, D. Yeah, that's helpful.
So the earning, and we do get, people asking about it because we do have hedge funds, RIAs, institute that do reference VWAP. So I do get that question. So let's come back to the UPS. So far, looks like the move, it's within its historical range. Here's the biggest move to the upside, biggest move to the downside, at the opening. right? So these are moves at the opening. What does the stock tend to do after the open? So wherever the stock opens up today, let's say even down, around this price, this is what it tended to do historically. From the open to the high of the day, the stock on average moved 2.5%. From the open to the low, down 1.9%. So what it's shown is that the magnitude to the upside was slightly greater than the magnitude to the downside. And by the end of the day, it looks like it was slightly more positive days than negative, 55% positive, 45% negative, for an average gain of 0.3%. The magnitude of the move from the open to the close. So let's say the market opened, the gap is whatever it is. Well, how much more volatility can we get intraday? So from the open to the close, the entire drift for the day on average moved 2.2%, with the big highest move 3.8%, lowest 0.6%. So this would be from the opening to the close, right? So if you're trading that intraday volatility, then these would be some of the historical reference points. The biggest move to the upside, 3.5%. The biggest move to the downside, 3.8% by the close. Okay. And if you want to just see, we are down. Let me see if I could find some similar situations here. Here's down 4%, down 6%, down 5%. So just eyeballing it, to me, it looks like, that those days that we were down, open down, the drift tended to be to the downside. In other words, those days that we opened lower, the stock from the opening to the close more often drifted lower. We don't have too many observations there, but that's what it did in the past. And this is how the stock reacted the day, following earnings, the day after earnings, the 1 day performance. So here, it looks like it started to trend higher. Most of the time, 64% of the time, all these days, it drifted higher, 36% lower. So that's an analysis of its historical return distribution after earnings in UPS. We can also let's go to the UPS. And under earnings, I'm going to come down here. This is where we are now. So right now the stocks, that's down. It's down almost 6%. And yesterday's implied move was 4.4%, which at this point now that's, that move was underestimated. In other words, that the stock is moving beyond the options estimated move of 4.4%. Okay. I'm going to come down here. And these are what the implied volatility tended to do. Okay. And we could see here that the implied volatility in UPS was 23.5. On a 30-day, usually it's 34 on average. So actually the day before, this was last time, the day before earnings, the average 30-day IV was 36. So this was on the low end, and the day after 27.7. So it does look like that straddle, to me, heading into earnings was priced on the low end of historical averages. All right, so what do we see here? That the straddle was, let me come back here. So the straddle yesterday was implying a move of 4.4%. So that's where it was priced. Historically, if we just took these 12, we took these last 12, historically, the average move, the options priced in is 6.3%. So you can see it's almost 2% below what the options usually priced in. And the actual average move of these 12 observations were 6.8%. So it was, for whatever reason, those options were priced pretty low yesterday relative to historical averages. And if we looked at even the implied volatility going out 30 days out, on average, that 30-day IV was 36.6 yesterday at 23.5. So this is where we were yesterday, 23.5, which is the lowest in the last 12 observations. This was the lowest price straddle going out 30 days that we have, since 2020. So I don't know why, but that, yesterday, but that straddle did look, that it was priced on the low end. More sellers than buyers, I guess.
Yeah.
And you could see here that even post earnings, that this 23.5, even post earnings, the day after earnings, this would be on the low end, because on average, implied volatility goes to 27.7, and and heading out the week after, on average 25.5. So if you were playing the straddle side of things yesterday, this looked like a cheap straddle to play from those historical, from all these historical metrics. This looks to me like it would have just been a cheap play on a straddle, because look at how much downside risk if this implied volatility was priced already below what it's usually priced after reporting earnings, right? You guys see that you'd think the implied volatility prior to earnings is high, then comes in. Well, yesterday, even prior to reporting earnings, this was already priced below the average post earnings announcement. So it didn't seem like that the downside risk to the implied vol was that high anymore. Hopefully you guys see that. But let me know if you have questions. So that's really quickly on UPS. If we don't have questions, I could navigate to another part of the website.
Can we look at something? I think maybe look at the earnings calendar, because we only have a few minutes left. I think there's some bigger tech earnings this week, correct?
Yeah, let's take a look at, I could look at the summary tables. So these summary tables here, I'm going to go to this full report next 2 weeks on this tab. And here's a list of, so some of these are just reported. These are today after the market close. So these are Microsoft, Google, all scheduled today. Right. So those are some big ones today. Microsoft, Google, these is a big one. What's that? Texas Instruments. That could be a big one. Let me see what today's looks like. Go to the earnings calendar. So these are today's. Let's do today after the market close or tomorrow before the market opens, right? So anything you would have to do today, right? These will report after the market closed today. So today will be the last day of trading before it releases earnings. And if they report tomorrow before the open, today would be the last day you could do something before earnings. And the top, Microsoft, Google, these, another Texas Instruments, Boeing. I don't see any other big tech stocks, but definitely these two are going to be really big ones. And I think with some of these big tech stocks, we're waiting to hear what they are going to say about AI, because everybody's talking about the technologies around AI. I'm sure we're going to hear from some of these tech companies regarding them.
Yeah, I mean, they're starting to charge for AI, right? Like OpenAI has they're starting to charge for the service.
Well, I think that that was always the plan to eventually
charge.
Right now they're just letting people use it and experiment and they learn from it. But I do think that eventually, they're going to be charging for using AI services. But we're right up against 9:30, so if there are no questions, well, I'll probably just end it here.
Yeah, that was awesome, D. Thank you so much, my friend.
All right, everyone, thanks for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Awesome. Great job, D. Thanks for